The US Federal Reserve is about to make a decision that has the entire financial world on edge. This isn't just about Wall Street bankers and stock prices. Bitcoin, the world's most famous cryptocurrency, is also anxiously awaiting the outcome. On September 18th, the Fed will announce whether it's adjusting interest rates. These rates act like the cost of borrowing money for banks. Why should Bitcoin fans care about this? Because when the cost of borrowing changes, it sets off a chain reaction across the entire financial system. If rates go down, borrowing becomes cheaper. This can make traditional investments less appealing compared to riskier assets like Bitcoin. On the flip side, if the Fed raises rates, it can suck money out of riskier assets and back into the perceived safety of bonds or savings accounts. The connection between interest rates and Bitcoin is complex. It's not as simple as rates down, Bitcoin up. However, the Fed's decision will undoubtedly create volatility in the crypto market. Understanding the basics of this relationship is key to navigating the potential ups and downs that lie ahead. Mark your calendars, crypto enthusiasts, because September 18th is shaping up to be a pivotal day. That's when the US Federal Reserve, often just called the Fed, will reveal its latest decision on interest rates. This announcement has the potential to send ripples or even waves across the Bitcoin market. Traders and investors around the world will be glued to their screens watching for any sign of a rate cut. The anticipation is palpable. Will the Fed take a cautious approach with a small cut? Or will they go bold with a larger reduction, potentially signaling weakness in the US economy? Each scenario carries different implications for Bitcoin. A small cut might not move the needle much, but a larger cut could embolden investors to seek higher returns in riskier assets, potentially pushing Bitcoin's price upward. Of course, the market doesn't always behave predictably. Sometimes it reacts in ways that defy logic and expectations. That's part of what makes the crypto world so exciting and also so nerve-wracking. The financial world speaks its own language, filled with terms and concepts that can seem like a foreign dialect to the uninitiated. Understanding this jargon is crucial for anyone looking to decipher the Federal Reserve's moves and their broader implications. When experts talk about a 25 or 50 basis point rate cut, they're referring to how much the Fed lowers the cost of borrowing for banks. This in turn affects everything from mortgage rates to the interest on your savings account. Think of it like this: a basis point is like a tiny fraction of a percentage point. Specifically, 1 basis point is 1/100%. So a 25 basis point cut is a reduction of 0.25%, which might seem minuscule at first glance. Meanwhile, a 50 basis point cut is double that, or 0.50%. While these numbers might appear small, their impact on the economy can be substantial. These seemingly small adjustments can ripple through the global economy, influencing everything from stock prices to international trade. If the Fed opts for a 25 basis point cut, it suggests a cautious approach. They're acknowledging the need for some economic stimulus, but aren't hitting the panic button just yet. This scenario might not have a dramatic impact on Bitcoin's price, as the market may interpret it as a measured response to economic conditions. Bitcoin, known for its volatility, might see only minor fluctuations in response to a modest rate cut. A 50 basis point cut, however, sends a stronger signal. This suggests the Fed is more concerned about the economy and willing to take bolder action to prevent a downturn. Such a move could inject more confidence into riskier assets like Bitcoin, potentially driving up demand and price. Investors might see this as a sign that the Fed is committed to supporting economic growth. As a result, Bitcoin and other cryptocurrencies could experience a surge in interest and value, reflecting increased investor confidence. The key takeaway is that the size of the rate cut matters. It provides clues about the Fed's outlook on the economy, which in turn can influence investor behavior and ultimately impact Bitcoin's price trajectory. By understanding these nuances, investors can better navigate the complex landscape of financial markets and make more informed decisions. Whether you're a seasoned trader or a casual observer, keeping an eye on the Fed's actions can offer valuable insights into the future of the economy and your investments. So next time you hear about a rate cut, remember that it's not just a number, it's a signal, a message from the Fed about the state of the economy and their strategy to keep it on track. And in the ever-evolving world of finance, understanding these signals can be the key to staying ahead. So stay informed, stay vigilant, and keep decoding the Fed's rate cut options to make the most of your financial journey. Section 4, Bitcoin in the Fall. A look back at past performance. As we head deeper into September, it's worth considering Bitcoin's historical performance in the fall. This time of year often brings a mix of anticipation and caution among traders and investors. The changing seasons can sometimes mirror the fluctuations in the market, with September acting as a prelude to the more volatile months ahead. Looking back at previous years can offer some, but certainly not all, insights into potential price movements. Historical data provides a framework, a reference point that can help investors make more informed decisions. However, it's crucial to remember that the market is influenced by a myriad of factors, many of which are unpredictable. October, often dubbed Uptober in the crypto community, has a reputation for being a bullish month for Bitcoin. This nickname stems from the historical trend where Bitcoin prices have often seen significant upward movement during this month. The optimism surrounding October can sometimes create a self-fulfilling prophecy, where traders' positive sentiments drive the market higher. In 2021, for example, Bitcoin surged to a new all-time high in October. This surge was fueled by a combination of factors, including increased institutional interest, positive market sentiment, and broader adoption of cryptocurrencies. The excitement was palpable, with many investors riding the wave of optimism. However, it's important to remember that past performance is not indicative of future results. The market's behavior can change rapidly, influenced by new regulations, technological advancements, and macroeconomic factors. Investors should always approach the market with a balanced perspective, considering both historical data and current trends. November, on the other hand, has seen its share of both ups and downs. This month often brings a mix of volatility, with prices sometimes swinging wildly in response to market news and events. Traders need to be particularly vigilant during this time, as the market can be unpredictable. In 2018, Bitcoin experienced a sharp decline in November, a stark contrast to the bullish trends seen in previous months. This decline was attributed to a combination of market corrections and broader economic factors that influenced investor sentiment. While in 2020, it posted significant gains. This highlights the unpredictable nature of the market, where one year's trends can be completely different from the next. The gains in 2020 were driven by renewed interest in cryptocurrencies and a broader acceptance of digital assets. This volatility underscores the unpredictable nature of the crypto market. Investors must be prepared for sudden changes and should have strategies in place to manage risk. The market's inherent unpredictability is both a challenge and an opportunity for those willing to navigate its complexities. December, historically, has been a mixed bag for Bitcoin. The end of the year often brings a variety of market influences, from holiday spending to year-end financial strategies. This can result in a range of outcomes, making December a particularly interesting month to watch. Some years have seen modest gains, with prices inching upward as investors finalize their year-end strategies. These gains can be influenced by a variety of factors, including market sentiment and broader economic conditions. While others have witnessed pullbacks, these pullbacks can be a result of profit-taking, where investors sell off their holdings to lock in gains before the year ends. It's a common strategy that can lead to temporary declines in price. Factors like holiday spending and year-end profit-taking can influence Bitcoin's price during this time. The holiday season often brings increased spending, which can have a ripple effect on the market. Additionally, investors may adjust their portfolios in preparation for the new year, leading to fluctuations in price. The takeaway? While historical trends can be interesting to analyze, they shouldn't be the sole basis for investment decisions. Investors should consider a range of factors, including current market conditions, economic indicators, and their own financial goals. The crypto market is driven by a complex interplay of factors, and past performance is just one piece of the puzzle. Understanding the broader context and staying informed about current developments can help investors make more informed decisions. The key is to approach the market with a balanced perspective, recognizing both the opportunities and the risks involved. Section 5. ETF inflows and the local bottom reading the market signals. Amidst the anticipation surrounding the Fed's decision, there are other indicators that Bitcoin watchers are closely monitoring. These indicators can provide valuable insights into the market's direction and potential future movements. One such indicator is the inflow of funds into Bitcoin ETFs or exchange-traded funds. These inflows can be a strong signal of market sentiment and investor confidence. ETFs provide a regulated way for institutional investors to gain exposure to Bitcoin without directly owning the cryptocurrency. This is particularly appealing to those who are cautious about the volatility and security risks associated with holding Bitcoin directly. A surge in ETF inflows often signals growing institutional interest and confidence in Bitcoin, which can translate into upward price pressure. When large amounts of capital flow into these funds, it can indicate that big players are betting on Bitcoin's future performance. Recently, there's been speculation that Bitcoin may have found a local bottom around the $52,000 mark. This level has been identified by analysts as a potential support zone where buying interest could outweigh selling pressure. This term refers to a price level where selling pressure appears to have subsided and buyers are stepping in. Identifying such levels is crucial for traders looking to make informed decisions about entry and exit points. While it's impossible to say for certain whether this is truly the bottom, it's a data point that traders are watching closely. The interplay between support levels and market sentiment can often provide clues about future price movements. The convergence of these factors, potential rate cuts, ETF inflows, and the search for a bottom, is creating a sense of cautious optimism in some corners of the Bitcoin community. This optimism is tempered by the understanding that the market is inherently unpredictable. However, it's important to remember that the market can be fickle, and sentiment can shift quickly. Traders and investors must remain vigilant and adaptable, ready to respond to new information and changing conditions at a moment's notice. The ability to read and interpret market signals effectively can be the difference between success and failure in the fast-paced world of cryptocurrency trading.